is why today we are delighted to be able to invite Isaac and Marcus. Isaac being the Chief Market Strategist from Moomoo Southeast Asia, and also Marcus, Vice President from SocGen, to bring us the ideas and how should we do this in the current market situation. What are the global trading playbook of 2026, and capturing both whether when it's going up or going down with DLCs. So without further ado, I hand the floor to to Isaac. The floor is yours.
Hi, good evening, everyone. So thanks so much, Jay, for that introduction. Right, it's always a pleasure to share the outlook, what I see in the markets with our friends, our audiences, and it's also nice to just to connect with fellow partners within the financial industry. So we took up quite a bit of time due to the technical situation, but not to worry, right? I'm sure there will be a recording one way or another that to be played on that will be posted on the Moomoo app and also shared on Investing Notes website as well. But let's dive right into it. Okay, so very quickly, just going to give you a bit of introduction to myself, right? And then I'll share with you guys the US market outlook, and then we go into the Chinese market outlook. And really, this outlook is going to be for the rest of the year at least. And then I will share with you guys how to access DLCs on the Moomoo app, right? And the question and answers portion, we'll actually leave it all the way to the end after Marcus has shared his part as well. So you guys actually have a better picture of what we're trying to do here and how we're trying to help you guys by giving you guys a bit more access to the rest of the greater market. So a very quick introduction about myself. My name is Isaac. I'm currently the Chief Market Strategist over here at Moomoo. And what I do is I actually provide the outlook for the markets, right? Either on a quarterly basis, half yearly basis, and I also actually do webinars to give out shorter swing trade ideas as well. Now, previously, prior to my role at Moomoo, I was actually advising hedge funds and asset managers, talking to their portfolio managers, traders on the desk, helping them to position their portfolios and to adjust their positions accordingly, of course, tailored to their fund mandate, right? So I do think that I know a bit more about what I'm sharing, and happy to also take any questions that you guys might have along the way. So if you have any questions that is related to the markets, I'll do my best to answer them. You can put it in the Zoom chat, right? For those of you who are currently on the Moomoo app, on our Moomoo app, I don't think you'll be able to hear my voice for now, but the Zoom link has already been posted on it. So click on the Zoom link, join us in the Zoom chat room, and then you can leave your chats, your questions right there. It's a lot easier. Everything is done in Zoom that way, and then I can reply along the way, or if not, we can keep the questions to the end. All right, so that's just a quick introduction about myself, but let's really get right down into it. And I really want to kick off first with the US market outlook. So very quickly, this is the S&P chart, right? Just to give you guys the backdrop of the S&P. This is the weekly chart, so definitely a longer term outlook. You can see on the right-hand side of the chart, right? This goes all the way into 2026. Now, as it stands, where the markets are, we are well into Q4 earnings seasons, earning season for the US markets, especially this coming week. Going into next week is when we start seeing all the big tech names starting to announce their earnings, right? And of course, for the greater part of 2025, you can see such a strong upwards rally, right? There are now talks of AI bubble, and people are generally concerned, right? Will this time round of earnings blow the market out of the water even higher, or are we going to, are earnings going to miss the mark, and then we see the S&P do some sort of correction, right? So from a technical point of view, I'm sure you guys have always heard, okay, the trend is your friend. Don't trade, never trade against the trend, right? And the trend is your friend until it ends, right? And for what it's worth, when you look at a market structure, it's always a series of higher highs, higher lows, and as long as that is intact, right? I do believe that we should always play in line with momentum, right? So from a technical breaking it down from a technical perspective, you can actually see the S&P holding above both the 21 and the 55 days exponential moving average. Now, personally, I prefer to use exponential moving average, very simply because exponential moving average actually gives greater weight, right, to recent price rather than somewhere all the way in the past. Okay, so where we are at in the market is more important than in the past, right? History does gives us some relevant lessons, but in the past it's always more important. In the current where we are is always more important. And you can see that there's very very nice beautiful upward trending lines for both the exponential moving averages. No crossover, none of this flat EMA action that we saw back towards the end of 2023 going into the start of 2023. Momentum indicator, which I generally use, which will be the MACD, right? The moving average convergence divergence indicator also is above, very strongly above zero, which means that we are seeing a very strong bullish momentum for the S&P. But of course, if you zoom in, right, the MACD is not really upwards trending. It's a bit flat. Now, there's a reason for it. If you were to break down the S&P into the 500 individual counters, right? I just checked, right, about 23% of the S&P stocks, right, 23% of 500, they are actually showing quite some strong bullish momentum. However, on the other side, 11% is showing bearish momentum. So 11% of 500, about 50, 51, 52 stocks are showing bearish momentum. Then the next question that comes into mind is, what then happens to the remaining 65 to 70% of the S&P, right? So without any doubt, those remainder counters are definitely a bit more flat, right? They are neither bullish, neither are they bearish. And this makes perfect sense because, as you guys will already know, that most of the S&P the S&P is skewed more towards the Mag 7, right? The mega cap stocks, and I do believe they make up for about 37% of the S&P weightage. So as long as this mega cap stocks are bullish, are leaning more into the bullish momentum, we can expect to see the S&P rise further. So that's from a technical perspective. As long as the S&P is holding above 6540 support, right, I do see further upwards pressure on the S&P to play towards 72.95 resistance. Breaking below 6540 is not going to make me turn bearish. It's just basically going to make me a bit more neutral. We'll see a bit more consolidation in the S&P, right? The key support level that I think everybody should watch out for on the S&P will be 62, 64, 62, 65 price support level. So if we have a weekly close below the 62, 64 / 62, 65 price level, then I think we will start to see a lot more deeper correction, right? Then it really just means that the S&P is going to break below this 62, 64, 62, 65 price level, and they will reintegrate this range that we last saw, 2024 highs. Okay, so that's from a technical perspective. From a fundamental perspective, we are getting a lot of feel-good sentiment coming up from the preliminary US-China talk that if you guys haven't been following closely, right, really kickstarted off this week in KL on the sidelines of the ASEAN summit. And then, of course, Donald Trump, even as he left KL on his Air Force One jet, right, he made a public announcement saying that he expects a trade deal with China to be completed by the time he meets President Xi Jinping on the sidelines of the APEC summit in South Korea. So you have the bullish sentiment coming out from there that a trade deal is going to be resolved between the US and China. At the same time, we have later tonight, we will have the US FOMC interest rate decision. And basically what's going to happen is, markets are already pricing in about 95% chance of a rate cut tonight, and then 97% chance of 2 rate cuts, the second rate cut by December this year. So we are already into an era of quantitative easing, right? In the sense that the Federal Reserve has started its easing cycle, and we're no longer tightening anymore. And with that, we should expect to see a bit more fund flows into the equities space, right? So fundamentally, technically, both the FATA picture is lining up quite nicely, and which is why I do personally see further upside for the S&P going forward into the rest of the year. Now, a bit more pretty than one plain chart will be this very nice rotational graph, right? This is what we call the RRG. So it's the relative rotational graph. Very quick way to break it down for you guys. Just think of it as it's always moving in a clockwise direction, right? So it follows the cyclical sector of the cyclical behavior of the market, where generally the sectors or the stocks that are in the leading portion, so they are outperforming the index. So the index will always be at the center of this graph, right? Everything is compared relative to the index, which is in the middle, and then it rotates around the index. That's why you get the relative rotation name, right? So anything that's in the leading quadrant will outperform the index. Over here in this example is the S&P. And then after that, from the leading quadrant, it slowly starts rotating into weakening. And then by the time it enters the lagging quadrant, right, you can see the lagging name over there. By the time it enters the lagging quadrant, it actually underperforms the S&P. And then, of course, when it's lagging, it starts recovering. It goes into the improving quadrant. And then finally, it continues on into the leading quadrant. So how professionals and users of the RRG actually look at this is, they try to look for sectors that are in the weakening side. They're soon going to be crossing over to a lagging. They will short these sectors or these stocks here that are crossing over into lagging. And then from those that are from improving crossing over to the leading, they start to look for opportunities to go long, right, or buy into them, right? So by the time it comes into leading, and then when it's coming down to weakening, they start taking profits. Same thing, they short from weakening, and then as prices drop, right, it goes into lagging. They start taking profit once the lagging starts improving, starts picking up. Right. So I probably oversimplified it. It sounds very, very easy. In fact, it is supposed to be easy to use, but things are never as simple as they seem to be. So using the S&P as an example, and all these pretty lines are the 11 sectors of the S&P broken down, right? Keep in mind that the long-term picture into the end of the year is bullish for the S&P. So when you have a leading sector like the telecommunications, right, which is in the leading quadrant, it means that telecommunications essentially is going to be more bullish than the S&P, which is already bullish, right? So you want to look for opportunities to buy within the telecommunication sector. However, you can see that the telecommunication sector is already coming down and crossing into the weakening quadrant. So even if you want to buy, you want to be careful and be very selective about your buys, right? Likewise, you have information technology, which consists of your tech darlings, your Meta, your Google, your Nvidia, right? Your what else? Your Amazon, your Netflix, right? All this clearly they are already in the weakening quadrant, right? So for some time now, they have been underperforming the S&P. However, there's always a possibility where the sector doesn't rotate all the way into lagging, right? It could actually just rotate into weakening and then suddenly go back up into the leading quadrant since it's already so far to the right, right? So just remember they tend to move in a circular clockwise fashion, right? And the closer you are to the center of the chart, right? The closer you are to the index, right? You tend to go through all 4 quadrants. But there will be time when, just like this info tech sector, right? You could go into one quadrant and then after immediately go back up into your previous quadrant, right? So from here, what we can see is that clearly telecommunications and IT tech sector, right, still continues to be in the leading phase, even though it's slightly weakening, but there is a high chance that they might rotate back into leading. On the other side, right, breaking it down, you have healthcare that is actually improving, right? In fact, healthcare, ever since United Health fell by quite a bit, right, it has actually been picking up. There are other healthcare stocks that also has been picking up quite a bit, and it's taking such a broad rotational motion, which then means that it may take a bit longer before it finally gets into leading. So healthcare is definitely also one sector that I'm watching out for. And especially once it comes closer to the leading side of things, that is when, I'll start doing a deep dive into what are the healthcare stocks within the S&P that could possibly, we can start buying into. Right. Just to give a quick summary again to break it down, right? Big picture wise, S&P bullish into the end of the year. Some interesting sectors that I'm looking at will definitely be telecommunications and the IT tech sector, and of course, healthcare, right? My sense is that the IT tech sector will probably rotate that back up to leading again, since it's so far away from the center. And then, of course, healthcare is something that I will keep a lookout for. Maybe sometime towards the end of the year, we can continue to look at this and revisit it again and see whether it's closer to the leading quadrant. I'll be a bit more careful about the material sector. Material sector has actually material and industrials, right, clearly in the lagging sector, and you can see that materials after climbing up, right, it starts falling again, and then it popped a bit and then it starts falling again. So materials tend to be tied closely with industrials and also all these rare earth talks and precious metals. Not surprising, because if China and US achieves a completed trade deal, right, then the prices of these precious metals tend to drop, seeing that now there will be supply that matches the demand for it. Okay, moving on very quickly, right? I spent a bit too much time on that, right? Since I did mention that I really want to take a look at the tech sector, okay, I'm gonna take the tech sector compared to the S&P. So you can see the XLK against the S&P on the top left-hand corner, right? Is not enough to know how the sectors are going to perform from a rotational relative basis. What I want to know is whether, from an absolute relative value point of view, when in terms of market timing is the tech sector going to outperform the S&P, right? So we've covered the rotational part. Let's move on. Let's do a bit of a deeper dive into the technical portion. You can see that the tech sector has actually done outperformed the S&P since the middle of 2025. I bet this was the April Liberation Day sell-off. And then it broke out of this descending wedge pattern to the upside, took a pause at a very nice 21-week exponential moving average before pushing higher, before outperforming the S&P again. So for me, as long as this relative value ratio is above 0.041, I do think that any consolidation will be a meaningful one, and I still look for further tech sector outperformance towards 0.0457. Of course, there is also a possibility that we might see a deeper than meaningful correction, deeper than meaningful consolidation down to the 0.0402 level, which is in line with the recent swing low and also in line with the 55 period moving average before any fresh push higher and outperformance of the tech sector. Again, looking at a momentum indicator, you can see that the MACD is well in the bullish territory, and bullish momentum is also starting to pick up as well. All right, so from a rotational cyclical standpoint, from absolute relative value standpoint, right, the tech sector does look set to outperform against the S&P. So for these two reasons, right, I do think that if I had to really choose the how to play it within the US markets, again, I've talked you guys through my thought process. I'm bullish towards the end of the year for the S&P, and then I scale lower. I'm also picking the tech sector. I'm bullish on the tech sector. I think the tech sector is going to outperform the S&P, right? So this is how we can start to scan for individual opportunities. Now, very quickly, moving over to the Hang Seng outlook, the methodology is exactly the same, ladies and gentlemen, right? We don't have to deviate too much. As long as the method works for you, it works for you. Don't try to change it, right? That's really how it is when it comes to analysis. So you can see that Hang Seng has really been in sort of an ascending channel since bottoming out in 2024, right? And more recently, for a greater part of 2025, the Hang Seng has actually been trending and aging higher very slowly on the upper half of the ascending channel. Recently, we just tested the ascending channel resistance, and then we came off a bit, right? We are holding above both the 34 period and 89 period moving exponential moving averages, but very limited upside to 27,500 for the Hang Seng, right? I will only turn full on bullish for the Hang Seng once it breaks out of this ascending channel to the upside, right? So a very nice strong weekly close above 27,500 will confirm further upside to 29,900. But otherwise, a bit of consolidation between 27,500, and then we may see a retest of the channel resistance, and then another slight correction down to 23,860, which is in line with the 34-week moving average. If you were to look at, so why I'm choosing to use RSI now instead of MACD is because when markets are in a consolidation, so in a channel, right, in a triangle, in a wedge pattern, in a diamond formation, I take those as consolidation pattern. So when there are consolidation patterns, right, I tend to look at RSI and stochastics. And clearly you can see that RSI is actually coming into a squeeze as well. So over here, the RSI may not be as meaningful as I would like it to be, right? So I won't really pay much attention to it or give much weight to it. But even then, we still have to have a view of the Hang Seng. And my view of the Hang Seng is that, I see limited upside with a bit more consolidation going into the end of the year. And then maybe from there, the closer we are to the channel support, right, we see the Hang Seng take off, right? So very well, the Hang Seng could really be one of those outperforming markets going into 2026, or rather the start of 2026. So applying the same logic using the relative rotational graph onto the Hang Seng, right? You can see that I compare the Hang Seng, and then the base in this center here is actually the Hang Seng index. So the Hang Seng is really just broken into the commercial and industrial names, right? And then of course you have the utilities, and then you have the financials, and then you have the property, right? So that really makes up the Chinese offshore market. And there's only one sector that will outperform the Hang Seng. The rest of it, right, you can see that it's going to be a very big drag on the Hang Seng markets, right? Financials, even though it's picking up, right, is already in the lagging quadrant. Utilities, you don't need to talk about it. It's so far to the left on the edge in the lagging quadrant. Even if it improves, it's going to be a bit hard to really find any real meaningful place within that sector. So let's just focus on the commercial and tech sector for the Hang Seng, right? So it's dipping, right, but it's well within the leading quadrant. So I actually take the Hang Seng Tech against the Hang Seng Index, right? So I've done the relative rotational graph. Now I want to take the absolute relative value of the Hang Seng Tech against the Hang Seng, right? And you can see that the Hang Seng Tech actually really bottomed out from the end of June all the way to September, and then it sort of broke out, right? It made a series of highs, higher highs, higher lows, and where we're at now is we are right holding above the 0.23 support level, and in line with the 144 day moving average. right? Coupled with the fact that, stochastics, if this is really is a consolidation, you take it as a wider range, is at a consolidation, right? The relative ratio is actually right on support. And the last time, imagine with me, if you will, the last time it tested, when stochastics hit the support, right, there was a strong outperformance of Hang Seng Tech, right? The same thing happened sometime in late May as well. There's a small bounce, right? And then in July, it sort of held there. Finally, November, right, you see another strong bounce again, and then we're now consolidating, right? So as long as this 0.23 support level holds, I do believe that the Hang Seng Tech, okay, will outperform against the Hang Seng Index, right? So a bit of consolidation here first, and then outperformance. Moving quickly, right? Yeah, so to sum it up, I don't want to take up too much time because cannot steal Marcus's thunder, right? And lightning. But to sum it all up, for those of you who either join halfway or have or are lost in all the pretty charts, right? For both the Chinese market, for the US markets, right? I am bullish on the US markets going into the end of the year. And if I had to carefully select which sector to look at, right, I will choose the tech sector. And even then, within the tech sector, there are still names, that we can find that will continue to outperform the S&P, right? So the tech sector for me still continues to outperform the S&P. Looking over on the Chinese markets, right, very limited upside. A bit more consolidation. 2026 could be the year for the Chinese markets to continue its outperformance one more time. That's the nature of the Chinese markets. It tends to have a very, very strong rally, and then followed by a bit of weakness, consolidation, and then after that, another very strong rally again. And if I had to pick from within the Chinese markets, which is the best sector, I would actually be looking at the Hang Seng Tech as well, and other commercial names also. All right, so I won't be giving you guys specific names because for compliance reasons, I cannot point out any names, any specific stock names as well, right? I don't really want compliance to breathe down my neck. Okay, so that is the outlook that I have going into the end of the year for both the Chinese and the US markets. So to wrap it up, just want to show you guys how to actually access DLC, and that is your daily leverage certificates on your Moomoo app. And DLC is actually a very nice and convenient way to gain exposure to certain US stocks and Chinese stocks, or even a broader index, right? With lower capital outlay, you can actually take advantage of the leverage that it offers you, which I believe Marcus will have more details to deep dive into and give you guys a clearer picture. So on the Moomoo app, if you actually follow with me on from the left to the right, you open up your Moomoo app. On the bottom corner, you can on the bottom bar, you can actually click on markets. You go to SG, right? And what you'll see very nicely right there, conveniently placed for you, is DLCs, right? So it's right under the screen as DLCs. You don't have to look all over the place for it. You click on DLC, it will actually bring you to a very nice menu for your DLCs where they're all listed and they have the name that they're listed, the ticker code, the name, and then the DLC specifications, right? You can click on the light bulb. The light bulb gives you a very wordy explanation of what DLC is, right? I do prefer to see Marcus's slide when it comes to DLC explanation. He makes it a lot clearer, right? But otherwise, if you want to take the time to read, right, the light bulb here will give you guys the lowdown on DLCs and how they generally work. What I like about this is, when you click this filter button, this scrubber volume filter button, it actually pops up a filter for you to help you filter out the DLCs that you want to buy into, right? It makes a lot of sense instead of endless scrolling, because there are just so many options for the DLCs, right? You have 5 times, you have 7 times, sometimes you have 3 times, and then there's long and short. So you want to be able to filter it out clearly, so you can choose the directional bias that you have, and then you look for the expiration, right? You generally don't have to set the price, the percentage change, or the volume, right? Just these 2 top categories will do, right? Once you've selected it, you click confirm, it should actually filter out all the DLCs that you are looking for. All right, so my friends, thanks so much for your time. I hope my very short sharing has actually value added to the outlook that you guys are looking forward to on the markets. There's quite a bit of news. We have FOMC meeting, we have core PCE decision, we have tech earnings that are coming up, how we can actually take advantage of DLC to play into that. And then we also have the Trump presidency meeting that will be happening soon. So a lot of volatility up ahead. I think these are fantastic, wonderful times, but also you guys need to remember to trade safe and to stay safe. All right, so that's all from me. I'll hang around for the Q&A portion, but Marcus, thank you for so patiently waiting. So over to you.
Thank you very much, Isaac, and thank you for Moomoo and Share Investor for organizing this session today for us to share more about the markets, but also how can you capture the opportunities in the market, right? What instruments can you use? Right, so let me quickly share my slide. Okay. So today, I'm going to share with you about this product called DLC, Daily Leverage Certificates. All right. So these DLCs are listed on the SGX securities market. All right. So SocGen, Société Générale, where I'm from, we are a French bank, but we're also known for our structured products. And I think we do have this structured product that's listed on the SGX securities market. All right. So these DLCs is a short-term trading instrument that you can use to navigate the market volatility. As what Isaac has shared, definitely there are many events coming up that will potentially generate high volatility events, and these DLCs could come in handy for those who are more active traders who will take a more active approach to your investment. This could be a very efficient instrument that you can use to capture the short-term opportunities in the market. All right, so these DLCs, if I were to say there's any instrument out there that is very similar to this DLCs here that we have on SGX, it will be the leverage and inverse ETFs. Right, those of you who trade the US markets, you are probably familiar with your TQQQ or your SQQQ, the Process Ultra Nasdaq 3x long, 3x short ETFs in the US. All right, so these DLCs are exactly the same payoff as a leverage and inverse ETF, just that these DLCs are in a certificate structure and not an ETF structure. All right, but the payoff is the same. All right, but because we are in a certificate structure, we can go higher in terms of leverage. Most leverage and inverse ETFs out there, the maximum is 2x or 3x leverage only. But for our DLCs here on the SGX, we go up to 7x leverage. But the payoff is the same. It gives you that fixed daily leverage, whether it's 3x, 5x, or 7x leverage on the underlying stock or underlying index daily percentage performance. All right. And also it comes in the form of a long DLC or a short DLC. So you can trade both bull and bear markets. Whether if you are bullish, you will buy the long DLCs, all right, that will rise in value as the underlying goes up. Or if you are bearish, you will buy the short DLC that will rise in value as the underlying goes down. All right. So you can express both sides of your view, both your bullish view as well as your bearish views on the market. All right. So even more opportunities for you to capture on both directions of the market. All right. So these DLCs are all listed on the SGX. SocGen, we issue the DLCs. We list it on the SGX securities market. And there, investors like you can trade the DLCs on the SGX just like a share. So either you trade it the same way that you would trade your DBS shares or your UOB shares. All right, you would look for the stock code. All right, the stock code for the DLCs, or you find the DLC name and then you go and trade it on your Moomoo trading platform. Okay, so same way that you would trade your DBS shares or UOB shares, you trade the DLCs as well. Okay, I'll elaborate a bit more on that later. All right. But you can access it through your Moomoo account, the same place that you trade your DBS shares or your UOB shares. You can trade the DLCs on that same platform. All right, so SocGen, we are the issuer, we listed on the SGX, and we also provide liquidity on each and every one of our DLCs throughout the trading day. All right, we are obligated by the exchange to provide liquidity on each and every one of the DLCs throughout the day. Even if there is no traded value on the DLC that day, it doesn't mean that there's no liquidity on the DLC. Because you have to look at the bid and ask prices, bid and ask volumes. SocGen, we are always quoting on the bid and ask prices, bid and ask volumes during the SGX market hours, as long as the underlying is moving. All right, so we have almost 200 DLCs that are listed on the SGX, and not every single one of them are traded every day. All right, So for some of the DLCs, you might see, okay, for today, it might be zero traded value so far, all right? But it doesn't mean that there is no liquidity on that particular DLC, because this is an issuer-led product, and we are the designated market maker, and we are providing liquidity throughout the trading day on each and every one of our DLCs in the bid and ask prices, bid and ask volumes for you to buy and sell the DLCs. All right, I'm stressing on this point because there's a number one misconception that I have heard from investors out there. You know, they're so used to trading penny stocks, they're trading to using trading stocks, that when they see zero traded value, they immediately think, oh, there's no liquidity on that counter. But that's not true when it comes to the DLCs, all right? So there could be no traded value, but it doesn't mean that there's no liquidity, because SocGen, we are always providing liquidity in the bid and ask prices, bid and ask volumes, all right? So I mentioned that we have a wide range, almost 200 DLCs that are listed on the SGX. So this is a brief view of what we have in our product range. So the DLCs will track an underlying index or underlying stock. On the indices range itself, we do cover the Hong Kong indices, so Hang Seng Index, Hang Seng Tech Index, Hang Seng China Enterprises Index. We do have 3 times, 5 times, or 7 times DLCs, long and short DLCs on the Hong Kong indices, and this is one of our most popular range, especially the Hang Seng Tech DLCs. I think with the volatility that comes on the Hang Seng Tech Index, the DLCs are very actively traded on the Hang Seng Tech DLCs are very actively traded given the volatility of the Hang Seng Tech Index. All right, so that's our most popular product, the Hang Seng Tech DLCs. Singapore, we definitely have the MSCI Singapore Index DLCs, 5 times and 7 times. And also the US indices, the Nasdaq, the S&P, and the Dow Jones Index. We do have 5 times and 7 times DLCs on the US indices as well. Right, so these key indices across the Hong Kong, Singapore, and the US markets, we do have up to 7 times long and short DLCs on them. On the Hong Kong side, single stock side, we do have the China tech giants, Tencent, Alibaba, Meituan, Xiaomi. So this is a subset over here. Some of the sample of the underlyings that we have over here, but we have almost 40 or 50 Hong Kong stocks available for you to choose from, ranging from China tech giants to more old economy stocks like the life insurance, Ping An, HSBC, the banks, etc. But we have a wide range of Hong Kong stock underlyings that you can gain 5 times long and 5 times short exposure to with our DLCs. All right, so for the single stocks, we go up to 5 times leverage only, 5 times long, 5 times short DLCs on the Hong Kong stocks. On the Singapore stocks, we also have 5 times long, 5 times short DLCs, mainly the blue chip counters like your Singapore banks, DBS, UOB, OCBC, as well as some of the other blue chip counters, Keppel Corp, Sembcorp, that you can use to trade using the DLCs. All right, and the US single stocks is something that is new to us. All right, we have recently expanded last year into the Magnificent 7 US stock DLCs. All right, so for each and every one of the Magnificent 7 stocks, Tesla, Nvidia, Apple, etc., we do have 3 times long and short DLCs on each and every one of the Mag 7 stocks. Recently, last week, we also recently expanded into more US stocks. So that would be your Broadcom as well as your AMD. So now we have the Mag 7 plus Broadcom and AMD as well. All right, this is we just listed the AMD and the Broadcom one last week, so I haven't had time to add it in yet. But we do want to expand the US shelf to more US stocks as well. So this US single stock DLCs is quite unique proposition. All right, it's probably a first of its kind in Asia, giving you that 3 times long, 3 times short exposure to US stocks during Asian hours. All right, so you have a new trading window now during SGX market hours, 9 a.m. to 5 p.m. You can gain that 3 times long, 3 times exposure to the US stocks during Asian hours. All right, so if there's any high impact news during Asian hours, Xi Jinping, Trump, China tariff, all kind of deep stick part 2, and there's a big move in the market, you can use the DLCs now to gain exposure to the US stocks during Singapore market hours, 9 a.m. to 5 p.m. Okay, we are very excited about this range, the US single stock, so I'll explain a bit more about that later on to help you understand, how does the US stock DLCs work, given that it trades during the SGX market hours when the US market is closed. Okay, so moving on first, let's look into, first of all, the basics of the DLCs. All right, I mentioned that the closest instrument that's similar to a DLCs would be your leverage and inverse ETFs. So your TQQQ, SQQQ in the US, these kind of leverage and inverse ETFs, the DLCs have exactly the same kind of payoff as that. Right, so the formula of the DLCs is as simple as this formula over here, where the daily percentage performance of the underlying stock or underlying index multiplied by the leverage factor 3 times, 5 times, or 7 times will equals to the daily percentage performance of the DLC. So in this example over here at the bottom, I know this is quite outdated. DBS is no longer at $30. But let's say, for example, DBS is up by 2% today versus its previous day. So on day 2, it's up by 2% versus its previous day, up to 2%. So my 5 times long DBS DLC will be up by 10%. 2% times by 5, 10%. While my 5 times short DBS DLC will be down by 10%. All right. Conversely, all right, if DBS was down by 2% today versus its previous day close, then my 5 times long DBS DLC will be down by 10%, while my 5 times short DBS DLC will be up by 10%. So this happens every day on a close-to-close basis. You will get that 5 times performance of the underlying stock or underlying index daily percentage performance all the way from the first day it's listed all the way till the day that the DLC expires. You will get that 5 times every day on a close-to-close basis. All right, so that is the basics of the DLC, the fundamentals of how the DLC work. At this point, I just want to make it clear that there are other leverage products out there that are more like option type products, either your options, exchange options, or your derivative warrants, etc., structured warrants. Well, the DLCs is not an option type product. All right, you can see from the payoff formula here over here, the leverage strategy formula here, there is nothing like an option. There is no strike price. There is no in the money, out the money, at the money kind of concept. There is no impact volatility. There is no time decay. This DLC just gives you that 5 times performance of the underlying stock or underlying index daily percentage performance on a close-to-close basis. All right, so not an option type product, not a warrant, just to make it clear so that you don't get confused as we go on. All right. So this is where the 5 times performance is. This is a screenshot of our website for this particular Alibaba Long DLC. So this Alibaba Long DLC with the stock code DKPW, all right? So this Alibaba Long DLC gained around 17 to 18% on this particular day earlier this year on the back of the Alibaba stock listed in Hong Kong gaining around 3.5%. So that's where the 5 times performance is, all right? So that's where you can get that 5 times performance is. If the underlying is up by 3.5%, the DLC will be up around 17 to 18%, right? Giving you that 5 times multiplier on this Alibaba Long DLC. And you can see at the top left-hand corner, you can see there's a 4-character code DKPW. So the DKPW is the stock code of this particular DLC, all right? So every DLC will have a stock code, and it comes in a 4-character stock code, such as this DKPW. So, if you want to trade this DKPW, you will go into your brokerage trading platform, Moomoo trading platform, look at the search bar, search for DKPW. You should be able to see this Alibaba DLC. Okay, so definitely that's the quickest way. I'll show you guys our website later where you can find the full list of DLCs. You find the DLCs on the website, you find the 4-character stock code, and then you go into your Moomoo trading platform to trade the DLCs over there on your Moomoo trading platform. Okay, and then you see the name of the DLC it starts with the underline. So this Alibaba Long DLC. So you'll start with the underline that is stock or underline that it tracks. This one is the Alibaba DLC, followed by a 5 times leverage DLC, and it's a long DLC. Remember, if you're bullish, you buy the long DLC. All right, and then followed by the SG. SG stands for the issuer code. So it stands for Société Générale. We are the issuer of this DLC, followed by the expiry date in year, mama, date format at the back of the DLC name. All right, so you can find a lot of information from the name itself, all right, of the DLC. And let's look at the 5 times short Alibaba DLC. All right, just to highlight again, where the 5 times performance is, you can see over here, because Alibaba stock was up around 3.5%, this Alibaba short DLC was down around 17 to 18%, giving you that 5 times performance. All right, so remember over here, your gains are magnified, all right, as per the Alibaba Long DLC you saw just now, but your losses are also magnified. This is a leverage short-term trading instrument. So take note, you have to position size accordingly, exercise good trading discipline, because this is a leverage instrument and swings can be quite wild, especially on the Hong Kong underlying DLCs. All right. So again, the name, this is the stock code of this 5 times short Alibaba DLC is Z7MW. All right. And then the name Alibaba 5 times short DLC. Remember, if you are bearish, you buy the short DLC. Yeah. So you find the short DLC if you want to express your bearish views, and then followed by the expiry date in year, mama, date format at the back of the name. Okay. So this is the short DLC. I've shown you a long DLC and a short DLC, and to illustrate where the 5 times performance is. And remember, your gains are magnified, but also your losses are also magnified because of the leverage factor. So I mentioned the DLCs are short-term trading instrument, right? So you can use it for day trading. When you do an intraday move, You buy in the morning, 9 a.m., you sell back at 11 a.m., intraday trade, all right? Or you can use it for a swing trade, for a trend trading, all right? For a few days or a few weeks. If you manage to capture a nice trending market on the DLCs, actually that's where it works best for the DLCs, in a nice trending market. It can give you really exceptional returns. It can give you more than the 5 times leverage if you manage to capture a nice trending market, and I'll share a bit more on that later. Lastly, you can use it for a short-term hedge. So the short DLCs in particular can be used for a short-term hedge against the market, against your long-term buy and hold stock investment portfolio that you're not going to sell, but you see an impending correction coming. You could use the short DLCs to hedge your positions. All right. So day trading is very popular among the DLC traders. A lot of our DLC traders all do a lot of day trading. All right. Right. They trade the Hong Kong underlyings, particularly for day trading, because of the volatility is quite high on the Hong Kong stock market. And then couple that with the 5 times or 7 times leverage factor on the DLCs, the swings can be quite wide. So even then, this time you saw the Alibaba 17 to 80% move. Over here, you can see that the Hang Seng Tech long DLC, 7 times leverage long DLC, gain around 17 to 18% on this intraday trade, intraday time frame, on the back of the Hang Seng Tech index gaining 2.4%. All right, so that 7 times kicker can give you this kind of double-digit gains on a normal day like this. All right, for an intraday trade. That's why the DLCs are really quite popular for day trading. You buy in the morning 9 a.m., you sell back at 2 p.m., and you make that 17-18% gain. Spectacular. All right, so that is one of the beauty of leverage, but also on the 7 times leverage that we have for the DLCs, especially the index DLCs. So intraday trading definitely is popular, but it might not be for everyone, right? So everyone has a day job, you might not have time to sit in front of the screen to day trade or to scout the market, all right? So most of us tend to be more trend traders, all right? You can use it for swing trading, all right? So this DLC, the 5 times long Xpeng DLC, all right? So the Xpeng 5 times long DLC, for this 1 month time frame, all right, 1 month time frame, the Xpeng stock listed on the Hong Kong Exchange gained 43% during this 1 month time frame, and the 5 times long Xpeng DLC VTMW, stock code VTMW, gained almost 300% gain during this 1 month time frame. All right, so in this nice uptrend where the Xpeng stock gained 43.5% within that 1 month time frame, nice uptrend. You can see from the chart over there, uptrend on the underlying stock. The DLC gave spectacular returns. All right, for those of you who are sharp, you'll notice, hey, 43.5% times by 5, that's only about 200+%, right? How come the DLC gained almost 300%? All right, how come it gave you more than the 5 times leverage? All right, so that is what I was talking about earlier, that in a nice trending market, the compounding effect feature of the DLC can work very well for you. All right, it can give you more than the 5 times leverage if you manage to capture a nice trend and your gains get compounded. All right, so the DLCs have a compounding effect that work very well for you in a nice trending market. All right, but it might not work so well for you in a sideways or volatile market. So that point, I will show you guys in an illustration later to go more in depth, because that is a very, very important feature on the DLCs, the compounding effect feature. But anyway, back here, the swing trade, definitely, if you manage to capture a nice trending market, the DLCs will work wonders for you. All right, but of course, over here, I've used a 1 month time frame. Generally, I would say as a short-term trading instrument, you can trade it intraday, a few days or a few weeks. But generally, I would advise everyone here that you should not be trading the DLCs or holding on to the DLCs for months or even a year. All right, this is not a buy and hold instrument. This is not a long-term investment product. This is a short-term trading instrument that you can use to navigate the short-term market volatility and capture opportunities. Okay, intraday, a few days or a few weeks, you can hold it, but definitely please don't hold it for months or even a year. Okay. Lastly, hedging. This one might be not so straightforward for everyone. All right, hedging requires a bit more sophistication and a bit more skill. You don't want to end up losing on the hedge underlying, also losing on your hedge instrument. All right, so hedging. All right, for those of you who are more sophisticated, you could use the short DLCs to hedge your underlying stocks, all right, that you hold. For example, if you're holding Tesla shares for the long run, you believe in Elon Musk, you believe in the long-term story of Tesla, and you hold your Tesla shares for the long term, all right, but you see an impending correction coming on Tesla, and you think that that you are sure, or you are confident that you will correct quite substantially, but you don't want to sell your Tesla shares, right? But you could potentially use the 3 times short Tesla DLCs to make some gains if the stock price indeed corrects, to make some gains. to offset your paper losses on your Tesla shares. So at least you won't be tempted to go and sell off your Tesla shares when the underlying stock really drops. All right, so you can use it as potential hedge. You can see that the Tesla 3x short DLC over here, in this 1 month time frame, Tesla earlier this year was quite volatile. Tesla declined by 37% during this 1 month time frame earlier this year in March. And the TSXW, the 3x Tesla short DLC gained 200% on the back of Tesla share price falling 37% during this 1 month time frame. Okay, so that's where you could use the short DLCs potentially as a hedge for your longer term investment stocks portfolio. Okay, so we now come to the exciting part on the US stock DLCs. This is something that we are very excited about. We launched this last year and we've been trying to expand the shelf. So we have 3x long, 3x short DLCs on each and every one of the Magnificent 7 stocks, all right, and also including the Broadcom and the AMD that we just listed last week. All right, so 3x long, 3x short exposure. And I think that this DLCs also come in a Singapore dollar current denominated counter as well as a US denominated counter. So you can choose to trade it in Singapore dollars or USD. So if you want to long Tesla, 3x long Tesla in Singapore dollar currency, you can choose the TSYW. All right. If not, you can choose the other one on the right over here, which is denominated in the US dollar currency. Okay, so you can go into your trading platform, Moomoo trading platform, search for all these counter codes. You will be able to see all the DLCs within your Moomoo app, and you can buy and sell the DLCs there. So how does the US stock DLCs work, right? Given that it's traded during SGX market hours when the US market is closed. Well, the market price of the US stock DLCs will be closely linked to the performance of the US stocks traded on alternative trading systems during Asian hours. All right, why is this alternative trading systems, right? So for those of you out there, who Singapore and Malaysia investors, if you are quite savvy, you would know that Moomoo is already offering overnight trading of US stocks. All right, so this is overnight trading. This is all traded on this alternative trading systems, but it's actual price discovery, actual price traded of Tesla shares, of Nvidia shares during the Asian hour time window. All right, so there's actual price discovery, actual shares traded on Tesla and Nvidia during Asian hours, and the price actually moves during Asian hours. That has been a recent trend in the last couple of years, and with that, SocGen, we are now able to issue this kind of 3x long, 3x short DLCs on these US stocks during Asian hours. All right, so let's look at the example very quickly. It's just how does it work on a 24-hour basis. All right, so let's look at the left of the chart. The US market closed 4 a.m. in the morning. The US stock closed at $100. The DLC closed at $1. All right, and then after the US market closed, let's say for example the stock announced better than expected results, right? And so by the time 9 a.m. Singapore time on this alternative trading system, this US stock was already up 6% on this alternative trading system or overnight trading. It's already up 6%. So at 9 a.m. Singapore time, when SGX market opened, this 3x long, 3x short DLC, 3x long DLC will be quoting at around $1.18, up 18%, 3x that of the underlying US stock's 6% gain. At this point, if you think that the stock is, good results, etc., you think the bullish momentum will continue, you can buy the 3x long DLC at 9 a.m. Singapore time, SGX market open at $1.18. And if indeed your view is correct and the underlying stock continues to appreciate higher as the, get closer to the US market hours, during Asian hours, it continues to rise further to $110, up 10%. Then my 3x long DLC will be up by 30% to be quoting at around $1.30. At this point, you can sell back the DLCs to us just before SGX market close at $1.30 to lock in a profit of $1.30 minus 118 purchase price, so your 12-cent profit. You can lock it in, sell back to SocGen before the SGX market close. But you can also choose to hold on to the DLC overnight, right? Past the SGX market hours, you can choose to hold it overnight, but and also the DLC will continue to maintain its exposure to the US underlying stock. But you have to be comfortable with the fact that you cannot manage your position overnight during the US market hours, all right, because the SGX market is closed. All right, so indeed, if the underlying stock continue to rise further to $115 as of the US market close the next day, plus 15% at 4 a.m. Singapore time, Malaysia time, the stock is up 15%. The DLC, the value theoretically is up 45% to $1.45, but you can't sell back the DLC yet at this 4 a.m. in the morning, right? SGX market is closed, Malaysia market is closed. All right, so you have to sell it back the next day at 9 a.m. Singapore time when the market opens. If the stock is still trading at $115, the DLC will be quoting at around $1.45, and then you can sell back to SocGen at $1.45 to lock in a profit of $1.45 versus your purchase price of $1.18. All right, so that's basically how the US stock works on a 24-hour basis, right? You can only trade it during SGS market hours, and you have to be comfortable with the fact that you cannot manage a position during the US market hours overnight. This can be found on our website. You can find out more information about the US stock DLCs on our website, which I'll share with you guys later on. More illustrations, more explanations on how does the US stock DLCs work, because I know it's not very intuitive, right? US market is closed. How can you trade Tesla shares during Asian hours, right? So you can check out our US stock DLCs on our website later on. All right. Before I go to the website, I just want to run off with the most important feature of the DLC. Right, the compounding effect feature of the DLC is one very important feature that you have to understand. It's a feature that is apparent in all leverage and inverse product, including the LNI ETFs. All right, so the compounding effect can work very well for you in a nice trending market, but it can work against you in a volatile or sideways market. All right, the table on the left here is a nice trending market where the underlying is up by 1% on day 1, up by 2% on day 2, and up by another 2% on day 3. So 3 consecutive days of gains to give you that 5% gain cumulative over the 3 trading days. And my DLC, every day you get that 5 times performance, right? Remember the fundamentals of the DLC, you get that 5 times performance every day. So day 1 is up 5%, day 2 up 10%, day 3 up by another 10%. So 3 consecutively days of gains as well, but cumulatively it gained 27%. All right, this 5 times long DLC on this underlying stock. You can see that the underlying was up by 5%, times by 5, that's only 25%, right? How come the DLC gave me 27%? The extra 2% kicker is because of the compounding effect of the DLC. Every day your gains and losses are locked in. So for this case, you get that compounded gains. 10% gain on day 2 is based off a higher base of $2.63. The 10% gain is based off a higher base of $2.89. All right. So similarly, that's where the beauty of the DLC is. In a nice trending market, you can get the kind of compounded gains, you can get more than the 5 times leverage. And that's why I say that the DLCs work the best in a nice trending market. But move over to the table on the right over here, that's where the compounding effect does not work well for you in a volatile or sideways market. The underlying is up by 2% on day 1, down by 4% on day 2, and rebounds back by 7.31% on day 3 to give a cumulative gain of 5%. But my 5 times long DLC, every day you get the same 5 times performance. Day 1 up 10%, day 2 down 20%, day 3 up 37%. But cumulatively, it only gained 20%, less than the 5 times performance because of the compounding effect. The losses on day 2 is locked in, and then the gain, the rebound on day 3 is based off a lower base of $2.20. All right, so the compounding effect will not work well for you in a volatile or sideways market, and that's another reason why I say that the DLCs are not long-term buy and hold instruments. All right, it's a short-term trading instrument because in the long run, markets are generally sideways. All right, and sideways market does not work well for the DLC because of the compounding effect. So short-term, remember, the DLCs are short-term trading instruments where you have a bit more visibility, a bit more conviction of the trend, and that's where the DLCs work best for you in a nice trending market. Okay, so moving on. I want to show you guys, this is our website, dlc.socgen.com. All right, so this is our website that you can find more information about the DLCs, educational information, videos, etc., and find the full list of DLCs as well. Let me just quickly maybe share screen on the on our website so that you can see, okay, that such a website actually really exists. All right, so remember, look out for our website, check out our website, dlc.socgen.com. This is our SocGen DLC website where you can find more information about the DLC. Under the education tab, you can find whatever that I've just shared with you, but more information as well, the costs and fees, etc. The airbag mechanism, please read up a bit more on this. I don't have the time today to share more on that, but please visit this website, learn more about it, learn more about the compounding effect. We have a lot of content here for you, all right? And if you find the content a bit too much, please do check out our videos as well, for a short 3-minute, 4-minute summary of what the DLCs are. How do you select the right DLC for your target exposure? We have quite a wide range of videos for you to choose from as well. And of course, the full list of DLCs can be found under products. All right, so under our search page, you can search for the underlying that you want. We have the US stocks, Hong Kong stocks, Singapore stocks all over here for you to search for the one that you want, right? Meituan, Alibaba, Tencent, etc. Whether you want a long DLC or a short DLC, and what leverage factor that you want as well over here. And then it will filter for you. So you want to trade Tencent and you want to go short on Tencent, short exposure, you're bearish on them, and you want a 5 times leverage, you can choose from the DLCs over here. All right, and if in doubt, always look out for the red star indicator that will tell you the most preferred, most sensitive DLC for your target exposure. So remember, always in doubt, look out for the RSI indicator on which Tesla, which one to choose when there's one or two or more DLCs on the same underlying, same leverage factor and same direction. You can look out for the red star indicator. All right. So please visit our website, dlc.socgen.com, to find out more. You can subscribe for our newsletter as well under here. We do send out newsletters twice a week for you to update you on what the new DLCs, what the market movers, etc. in our DLC long newsletter over here as well. So do sign up for our newsletter. And also, last but not least, if you have any questions at all on the DLCs, you can call our hotline here, Singapore number over here. All right, but those of you who might not have access to Singapore number, please do drop us a note on our contact us form as well. We'll be happy to call you back to share more information about DLCs or any questions that you have. We're happy to address them over here. All right, so you can reach out to us on our hotline, or you can write us a contact us form at the top over here if you have any questions or any feedback on the DLCs. All right, so I think that's all for my section. Thank you so much for coming in today to hear about the markets as well as the DLCs. We hope that you do learn more. Follow us on Moomoo as well. Under SGDLC News, you can see our community account under the Moomoo in the Moomoo community, SGDLC News. Please visit our community account and also follow us on that Moomoo app community. Okay, thank you very much, and I think it's back to you, Jay.
Thank you so much for Isaac and Marcus sharing on market outlook and also how can you capture those market outlook accordingly. So before I move on to end this session itself, I saw there's one or two questions on the chat itself. Maybe I started off with Isaac. So from Alexa, we have a question. So what's your forecast on the Brent oil trend?
Great question. I think personally speaking, I do see further downside for Brent crude oil, especially as the tensions, if really the tensions in the European region and the Middle East region starts easing up, definitely a bit more of oil downside to see. However, for that to be convincing, I really do want to see oil first. I'm referring to Brent crude oil. So I do want to see Brent crude futures break below the $60 region. Breaking below a $60 region, I personally think it may go all the way down to the 48 price level. What is interesting, more importantly, apart from just investing into oil, right? I do think one key thing to look out for is the rising gold prices and the falling oil prices. If this is a pattern that persists, right, we could see a bit more shakeout in the markets up ahead, because traditionally speaking, falling crude oil prices and rising gold prices tends to lead into a recessionary period. But that's really more longer term, say maybe over the next 3 to 6 months, something to watch out for. But yeah, those are the technical levels for oil that I'll be watching.
I believe everyone's now worried about recession. Hence, I mean, that's the reason why the gold price has been surging crazy high. But in the same time, the crash are crazy as well on what happened a few days ago. But on top of that itself, I do have some questions for Marcus here by Patrick. So Patrick here is asking, so because Moomoo itself, they have margin feature. So what's the advantage of using the LC as compared to using the Moomoo's our margin in general? What are the advantage and disadvantage accordingly?
Sure. Please correct me if I'm wrong, but I don't know. I don't think that if you like broker margin, when a broker provides margining, etc., I don't think you can go short. I'm not sure. But I mean, there could be some limitations there as well on going short. Most brokers tend to offer margining on the long side, but on the short side, margining might be quite limited. All right, so that's one of the perhaps difference between that. On the DLC, you can go long or short. Most of them you can go long or short. But on broker margin, there could be some limitation on the short side. And also on the broker margining, sorry?
Sorry. You go on.
And on the broker margining side, I think the leverage is usually maybe 2 times, 3 times margining leverage. So quite similar to the leverage and inverse ETFs, right? I guess. I think the DLCs, we can go higher in terms of that. We go 5 times, 7 times leverage. So that could be more for people who want a bit more more higher leverage, you could use the DLCs as opposed to broker margining. And last benefit of the DLC is, I think the DLC, the leverage is inbuilt into the product itself. All right. So when it comes to not just broker margining or any kind of margin products out there that offer you leverage, all right, whether it's CFDs or etc., you could face the risk of a margin call per se. All right. If the underlying moves 30% against your 5 times leverage, 150% loss, you could be potentially have a margin call to top up, etc. But for the and perhaps even owe the broker or the provider. But for the DLCs, it's not a margin product. The leverage is inbuilt into the formula of the product, and it's a securitized product, which means that if you buy $1,000 worth of DLC, even if the underlying move 30% against you, 5 times DLC, 150% loss, but you're not expected to cough up 150%. All right, your maximum loss is 100%. All right, 100% is no joke, but at least rest assured that your loss is 100%. You will never be expected to suffer more losses than your investor capital or more than that $1,000 that you put into the DLC, right? But other than that, I think for a broker financing, most brokers offer margin financing, etc. I think it's super convenient, right? Right. I know it's super convenient. That's one of the benefits of that versus trading the DLC. It's super convenient, super easy to understand, super easy access. And I think that is no doubt one of the easy ways to gain leverage. For the DLCs, you have to do a bit of homework, all right? You cannot just go in there and just trade a DLC blindly. I encourage everyone to really read the website, the information, understand the compounding effect feature, understand how it works before you trade a DLC, because it's not as straightforward as the broker margining. Okay? Thank you.
So based on Marcus's advice, this is not like you're shooting any birds or anything, just don't random shoot, do some learning first, because effectively you'll be leveraging 3 times, 5 times, or even 7 times, which is I think most margin maximum usually give you up to 2 or 3 times, as compared to leverage items you can go up to 7 times with, which is mean by if the $100 would become move to $200, your $100 is another $700 gain itself. So proceed carefully, and of course, these are some of the risks that we can take up onto it as well. But before I move to another question on the rare earth itself, I have a question for iExpert on my personal perspective, because I mean, given now you mentioned on the FOMC and everything, so how much volatility do you think the rate cut's gonna move the market next year?
Great question. Thanks so much for the question, Jay. Before I jump into your question, I also take it upon myself to just add on to Marcus's comment on the margin and the DLC part, because our friend was actually asking based on the Moomoo platform. I think one more thing to take note of is that not all stocks on the Moomoo platform can actually be bought or shorted based on margin, right? And that is where also you have the advantage of DLC, right? So DLC does, if you realize that a certain stock you cannot buy on margin, right, you can actually use DLC to use that leverage to actually expand your position further. So Marcus smiling because that plays in line with his product advantage.
We don't have a lot. We don't have every stock as well on the DLC. All right. So if you're thinking to trade your open door on the DLC, I'm sorry we do not have open door. Those meme growth stocks, I'm sorry we don't have those. So that unfortunately that we don't do.
Yeah. So of course, those meme stocks, you got to be really careful about it. But yeah, so that's just to add on to Marcus's point. So Jay, back to your question, with regards to the rate cuts, I believe, how much will impact the markets next year. I think as of now, markets are generally very much sentiment driven. As I've highlighted earlier, and also at a very recent MoveFest KL, MoveFest Malaysia outlook, right? Markets are really pricing in 2 rate cuts by the end of the year. So that's not even if really even if let's say tonight the US Federal Reserve does announce a rate cut, right? I don't think we will see a very strong jump in the US markets. Probably we are fast approaching the US markets opening hours ready, right? So it will be nice to see how the markets react to that. But for a long-term view, right? I think more importantly, if you're talking about Federal Reserve and the long-term picture, I think what is important is really to look out for when Jerome Powell steps down, who will be the next chair of the Federal Reserve. Because right now, rate cuts aside, people are starting to actually wonder whether Trump is going to try to come in and muscle in and take over the Federal Reserve. Then the whole issue of the independence of the Federal Reserve will once again be called into question, right? And if the independence of the Federal Reserve is seemingly from an optics perspective taken away, then it will actually give a bit more volatility to the market, and this will not be good volatility, right? I do believe this will actually be some sort of a headwinds and downside pressure for the markets on the longer term perspective. So Jay, I hope that answers your question.
Yeah, I mean, a lot of people be expecting. I mean, even though no one's talking about the 0.5% rate cut or whatsoever, but sometimes when people, you saw some kind of sentiment, it's like, oh, would that be a 50%, I mean 0.5% rate cut itself, and everyone should be talking about it and how big of the jump. I think people are just curious what's gonna happen, because it has been very volatile on 2025. Will they get the same volatility on 2026, or could the volatility even be higher or bigger for 2026? I mean, regardless, but thank you so much for the answer itself. It answers my question, but unfortunately, just to share with everyone, time is short, and I hope everyone enjoyed the webinar, but we gotta wrap it up already. So feel free to follow, get into the newsletter, or join to the community on SocGen itself, on the Moomoo itself, so that you can post a question from time to time, whereby I believe Marcus or Isaac themselves, they will have follow you, answer you all accordingly from time to time being as well. So do stay tuned on that part. And without I mean, I still see few questions, but unfortunately we have to wrap it up. If you like it, do give us a thumbs up, so that next round we can have another round of webinar as well. So we put this to the end, and thank you so much, Isaac and Marcus, for spending the evening with us, and of course all the participants with us as well. Thank you so much.
Thank you, Jay.
Thank you, everyone.
Isaac.
Thanks, Marcus. Thanks, Jay.
Thank you. Good night, everyone.
Bye.